I hear repeatedly is this statement: large caps or Nifty 50 is the safest place to be in, micro caps are dangerous and volatile, or small caps are volatile. Valuation does not matter if the stock feels safe. It sounds prudent, it sounds mature, it sounds responsible, but it's not analysis. It is emotional insurance that large caps are safe. It is a theory we tell to ourselves to feel calm, to feel protected and rational. And yet, comfort is not protection. Safety is not determined by market capitalization, and volatility is not the same thing as risk. Risk is not loud, risk is what you don't understand. Inside that resilient Nifty 50 and Nifty 100 index, several stocks like ITC, TCS, Tata Motors, Asian Paints, Infosys, Unilever, these guys corrected 20 to 40%, and a few businesses faced structural headwinds masked by index weight adjustments. Individual stories diverged supply from the headline number. The index smoothened the narrative. That is what indices actually do. They compress the dispersion into a single number. But the dispersion is where the risk lives. Another uncomfortable fact about the Nifty 50, one we all know but rarely pause to examine, is this. It is not a static collection of safe companies. It is a dynamic, momentum-driven index. Companies like Hero Motors, Britannia, HPCL, Indian Oil, IndusInd Bank, Shree Cements. Companies like these were excluded out of the Nifty 50. And companies like Max Healthcare, Zomato, Geo Financial, Trent, Indigo, they were included in the Nifty 50. Underperformers are replaced by the outperformers. Winners get heavier weights and the index survives. Not because every constituent is resilient, but because the weakest are periodically removed. In other words, the index evolves. But when you buy a single Nifty stock, you do not inherit the evolution mechanism. You inherit the business with all its strengths and weaknesses. And that is where the risk lives. The real risk is not size. The real risk is if you don't understand. If you don't understand the business model, the industry structure, the promoters, the management, the balance sheet, and of course, everything else, valuation relative to the opportunity.